Hello, welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald. On this sunny Monday, I hope you all had a great and relaxed weekend and are prepared for the new trading/investing week. As always, in this stream, we're going to look at my positions, what I plan to do during the week, where I think certain stocks and indices are going to move, and share pretty much how I manage my portfolio. But before we get to that, as always, let's get the usual disclaimer out of the way first. Everything that I share in this live stream/video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, and make your own decisions. Last but not least, as always, the reminder, all the tools that I'm using, so the charting software, the broker, the strategy I'm following, and everything else is linked in the description down below. And the one thing I really recommend you check out is actually the Elliott Wave principle. You can read it online for free by following the link in the description down below, or you can order yourself a physical copy like I did. Now, with that said, let's jump into it. I think the first thing I want to look at this week is gold. Last week, I think in the Friday stream, if I'm not mistaken, somebody asked like my analysis for gold, and we did that during the stream. And we started based on the monthly chart that helped us identify that basically from down here we have potentially a new 5-wave impulse pattern. So starting in January 16, which goes like 1, 2, 3, 4, and now wave 5, which means from October 3rd, 2022, we are in that 5th wave. And then we worked our way down. October 2022 is somewhere here. No, that's September, April 2020, there. So that's the area actually, September, October here, yeah. And then here we have another 1, 2, where we currently in wave 3. So gold, according to my bigger forecast, should still have room to grow. Now, if we look on the hourly chart, what we did in the end, we identified that there is another potential 1, 2, 3, 4, 5 in progress, with wave 5 having 1, 2, 3, 4, and now wave 5 in progress. And actually, we made our stream. I don't know if time should be somewhere here. And I think it's going to play out like this. So we saw basically now for the 5th wave, wave 1. So we have the breakout here, wave 2, and now wave 1, 2, and get wave 3, 4, 5. So there's still room to grow. For the exact profit targets and the exact labeling, you can check out the episode from the 12th of July. But yeah, just wanted to jump into that real quick before I forget. Now, other than that, if you've checked the previous streams, then you know that most of my portfolio currently is in GameStop shares, where for this week we sold the $35 call options. So basically, if GameStop goes above 45, we lose the shares. Otherwise, we pocket the $275 in premium, which is a little bit more than 1% in return for the week, which is not like an amazing or incredible or super high return, but definitely also not a bad return either. As for GameStop, we're currently, I have to zoom out a little bit. So it looks extreme like this, but when we zoom out, it's put into perspective. So we went higher than the 26.69 that we marked here as a potential like indicator or point where if we go higher than this, then it's possible that we bottomed out here in the corrective pattern and that we now are going to see the 1, 2, 3, 4, 5 pattern upwards, which is also the reason why I did not sell $30 call options this week, since we got the shares, or I got the shares assigned at the $30 strike price. But I believe that this week we might actually break the $30 mark. Now, obviously, if that is indeed wave 1, for example, we would still need to get a wave 2 and then a wave 3, and it's possible that everything drags out longer than I thought. However, looking at things right now, or based on Friday when we bought the option, I think it's possible that we finish the week above 30, and in that case, I rather profit as well on the shares. Because if I would have sold the $30 call option, we would have made around $150 more in profit from selling the options, which would be 1% extra return. So on one hand. On the other hand, if we indeed go above 30 or above 35 even, then that difference here on 500 shares makes a $2,500 difference, which is an almost 20% return. Therefore, I went for a lower option premium this week. to simply, if it happens, increase the profit we take from here. Now, yeah, like I mean, GameStop we cover in every episode, so there is not that much new stuff to share because we don't have any substantial movement. The big question is still, did we indeed finish the corrective pattern that we have down here or not? Now, as said, because we went above the 2669, I think it's likely that we finished the corrective pattern already. But we'll have to wait and see how things to develop to get like a real confirmation for that. Yeah? And so much about GameStop. Now, other than that, 1 second. We also hold shares in Greenwave, SunPower, COS, NEO, Barnes & Noble Educational, Immersion, and Faraday Future. So 2 electric car manufacturers, 1 solar company, 1 electric headphone producer, and 1 haptic device manufacturer. Some of them are like small investments, as it quotes, pure gamble. Others of them are positions that we slowly build up, basically by using the option premium that I'm earning to buy shares. And we also keep an eye on the now what's it called, like stock yield enhancement program. So basically, Interactive Broker can lend out our shares to short sellers, which obviously is kind of a little bit counterproductive because it means like we are providing the ammunition for people to bet against the stocks we're invested in. But again, like for those positions in my Interactive Broker portfolio, I don't care about that. Everything that I hold long-term, I hold at the transfer agent directly. So that said, we can also then see interesting things like that Greenwave, for example, apparently seems to be heavily shorted because on Friday, for example, from out of our 200 shares, 187 got borrowed, and with a net fee rate of 55%. So that would be like 55% interest rate, or 110% interest rate that Interactive Broker charges for borrowing the shares, and we get 50% of that. And that's obviously a high interest rate to pay to bet against the stock, because it would obviously, if you pay 100% interest in a year, you'd have to believe that the stock will go to zero in less than that time to actually make it a profit for you. Even if it's 55% that you pay, you'd have to still hope that the stock drops another more than 50% just for you to be break even. Cost not that heavily shorted. We see from our, I think we have 100 shares at the moment. 100. We see the interest on net fee rate here is 15.36%, and SunPower, surprisingly, the play that gets mentioned in the short squeeze subreddit, still relatively often in my opinion, only has a net fee rate of 5%. However, the surprising thing here is that at the moment, none of our GameStop shares are lent out. So on Friday, none of our GameStop shares were lent out, which means that there doesn't seem to be that much of a demand for borrowing the shares and shorting GameStop at the moment, which is interesting. Now I'm gonna drag that window away for a second, and I'm just gonna open up a different statement. Just takes a moment. Let's go custom. There we go. So that's the one for July 1st till July 12th. So not just last Friday, but everything till last Friday. And there we can see where we have it, stock yield enhancement program. It still only lists the Friday. Okay, so what was the latest one? Okay, but we also see the movements, and we see, although we don't see the historical net fee rate. Okay, I thought that would still be visible. We can basically see here, if we look then for GameStop, basically till the 10th of July, our shares have been lent out, but never all of our shares. At most, it was 300 shares. Basically, that was at the end of June, and we got them back on the 1st of July. And then 250 shares, 200 shares, 220. So not even half of our shares got lent out, but only till the 10th of July. And since then, none of our GameStop shares, so for the last basically 3 trading days, if we count today as well, none of them have been lent out. On the other hand, if we look at GWave, so Greenwave, then we can see, I mean, we had less shares in the beginning, and then we increased our position slowly. We can see that it varies a lot. Our GWAP ends here, but it always seems to be very close to borrowing the maximum. For costs, so the electronics manufacturer, they produce headphones and stuff like that. We also usually are close to borrowing or lending out all our shares for pretty much most of the time, or actually it only started on the 9th, but I'm not sure when we got the shares. Probably we just bought them on the 9th, so that's a possibility here. And for SunPower, we can see that pretty much most of it is lent out, but again, it only started, I don't know when we bought them either, so maybe we also just jumped into that last week, so I would have to check the previous streams, yeah. But yeah, so we see GameStop is not that heavily shorted. I mean, at least according to our portfolio and according to shares being borrowed from our portfolio for shorting purposes. As far as the other positions go, I think the interesting one, so I said, like the Barnes & Noble one is kind of like a gamble position. We'll see how it turns out. So it's like either that here turns into some 1-2 pattern and we go up, or we go further down. I mean, like I know it's a smart statement, so either we go up or we go down. But basically, this is a pure gamble on the assumption that this might actually be a first 1, 2, 3, 4, 5 impulse wave, which might then mean that we have our ABC in some form down here. And the question is, will we go up to confirm that, or will we go further down and we simply haven't seen the bottom yet? CRKN is further going down. Yeah, I mean, it's similar like here. I mean, that's a trade where we lost like $70 or so because the assumption was the same. That might be 1, 2, 3, and we get wave 4 and wave 5. But turns out that that's some other kind of pattern or no pattern at all. And as a result, made a loss on that trade. Faraday futures, same thing. So I believe that this might be 1, 2, and we now are about to see wave 3. So however, there we are playing or hoping to sell that combi call option here, or combo call option here to get $80 in premium, because if we get the $80, I have the 200 shares for free, and I still make a profit if the price goes higher than $1 or $1.50 until 2026. If it doesn't, I still have the shares, and with an average value or average purchase price of like 0, because we can see 200 shares times $40 is $80. So if I get $80 in premium, I hold 200 shares for free. We'll see how that plays out. So, but I think there is the chance that from an Elliott Wave perspective that this is 1, 2, or probably 1, 2. And from here now we bounced on the 61.8 retracement. From here now we're developing the next 1, 2, 3, 4, 5 for wave 3. And might actually be worth to stock up more, especially since we have the benefit that for Faraday, we actually also can trade options, which means we can sell covered calls, although the premiums are low, as we can see. So it's like, because the price is also low. Might also be worth, on the other hand, maybe as a gamble to buy some long-term, so some leaps call options. So basically say, okay, for $25, we would get the $1 call option. We'll think about that next week. So once we have capital free again, I know we could use our excess liquidity and so on, but as far as actual funds, we can see that everything is locked in one position or the other. Circling back, so GameStop we already covered. GWAV, so GreenWave Technology Solutions. Same thing. Initially, we got into that under the assumption that this might be 1, 2, 3. Since then, we've been going down. However, I have to say, considering the high short interest, so the high interest rate short sellers have to pay at the moment to borrow shares, one might believe there's a chance for a potential short squeeze that drives up the value really or relatively quick. Let's actually clear the local data to make sure everything here is up to date. Immersion. I think there we are on a too small chart. I think there we are currently finishing either wave 4 is finished here and we get wave 5, or wave 4 is gonna play out like this and then we get wave 5. Either way, I mean, did we already go through 11? No, we turn around 1099. So here would be my alert if we go above 11, because here we were at 1104. Then I think we are in wave 5 and have some upside and can then eventually sell the few shares that we hold. Cause, on the other hand, similar thing. So assumption is, of course, it would have been nice to get in here, yeah, but didn't bother to look at it or to take it seriously. But now that we see the potential pattern that could again be 1, 2, 3, 4, 5, or 1, 2, question is just like, how far will we go? I actually thought that will be our turnaround point. That's why we entered at $10 per share. Yeah, turns out I was a little wrong, so I assumed that would be A, B, C. Technically, we could go down to 650 to still be within the pattern that I'm seeing here. If that were to happen, we might probably just buy a few extra shares, and depending on how much cash we have on hand at the moment. But yeah, I think that there might be long-term growth to come as well. NEO, same thing. I assume we have something like 1, 2, and are now about to see wave 3 upwards slowly. So happy to be in there. And then we have SunPower. Now where do you go? There we actually now had that breakout that I was waiting for. We turn around a little bit below the 78.6 retracement level. It's possible that this is 1, 2, and we are now getting also wave 3 upwards here. So we'll have to wait here, but yeah, like I'm happy to hold those shares. And that brings us pretty much to SPY, so the Standard & Poor's. Surprisingly, we made a new high here. We are right now on an hourly chart, okay. We had it shorted here, so we made a profit here in that area. We stayed out of the whole movement here, although it was an impressive movement to miss out on. And I'm actually surprised about this. I didn't notice this on Friday evening. I thought on Friday I would have assumed that maybe we'll get an A, B, C and another push down. Great that I didn't enter there in any way, because clearly that has to be the corrective pattern. And so in some form A, B, C. And now here we have the next 1, 2. Or it could be that 2 is not finished, so that basically, let's see, where do we turn around here? Yeah, I mean, perfect on the 50% retracement. So it's possible that the whole wave 2 is already finished here and that we now get the next push up, or it's possible. The other option would be that this will be A, B, C, and then we get the push up. So yeah, I mean, the third option would be that all those things here are somehow kind of like a flat correction, which means that would be A, B, where B makes a new high and C goes down. But I consider that less likely. So we're still we don't have excess funds at the moment available, but if I would have to enter, I probably would go long and have the stop loss potentially at 555, so that even if this plays out at ABC, yeah, then I have a, in quotes, bad entry, but after that, it should still bring another push up. So you obviously have to then do your calculations in terms of risk management. And again, you should only do that based on your own decisions, not because I say I would. Yeah. Yeah. And what else do we have? NVIDIA is always worth looking at. I think there we might currently experience a sad wave 2. So we have wave A, we have A, B, C, in my opinion. And now we have wave 1, 2, and should in the next couple of days or weeks, the next 2 weeks, I would guess, yeah, get our wave 3 down, 4 down, 5 down, for a total of at least 110 to 95. So somewhere here to yeah, like finish the corrective pattern. I might be wrong, but that's just what it looks like to me right now. As for shorting it, stop loss would need to be at 137.32 if we assume that this is wave A, B, and we now get wave C. Again, I don't have any extra capital available right now to jump into that. I'm not going to do it on margin. So yeah, maybe that's like where I'm missing out on profit, because obviously one good trade here can pay out much more than selling covered calls. But slow and steady, I think, wins the race. I've had my share of trading with leverage, trading on margin, and so on. Partially with insane profits, partially with mind-boggling losses for me. And I have to say, ever since I switched to interactive broker and focus on like a little bit more like trading the wheel in quotes, so selling puts, selling covered calls, and holding smaller individual positions that are unleveraged, trading became less stress-free. And even though I only switched 6 weeks ago to interactive broker, we are effectively up around 50% during the 6 weeks. However, during the last 4 weeks, we are trading sideways and are around like plus minus zero, which, if I'm right, should change during this week. Yeah. Now that we get that stronger movement down here, there are two options, by the way, in NVIDIA. So either this is already wave 1, 2 finished, and we're now getting wave 3 down, or where do we have the line here? Yeah. Or this is simply wave A, B, and we still get a push up to at most, let's say 135 or so. Again, still stop loss would need to be here before we go down further. One would have to look closer, but I don't see a reason to do that right now. So yeah, so we're back at GameStop for now. And it's a little bit hard to look at the chart because we have those extreme movements which just make everything seem so, even movements like here where we basically have a 30% growth just look so small in relation to the pushes or the movements that we get otherwise. But basically, either way, no matter how this plays out, I think obviously it's possible that this pattern here is not finished yet, but once it does, and it should eventually, because it should turn out as a 1, 2, 3, 4, 5, for example, or maybe that's for wave 1, then we should get a correction for wave 2. And I don't think that we have any kind of big enough retracement to, yeah, so maybe, not even here. So I don't think that we have a wave 1, 2 situation here already. I think it's more likely that we're still within the first wave. And yeah, it remains to be seen. We'll have to keep an eye on it, how it plays out. Obviously, as said, I expect there will be a drop still. The question is just, I mean, then you can just go ahead. So if we assume that our corrective pattern finished here, you could technically just have your Fibonacci retracement, and whatever the current high point is, just throw it on top of it. And then so again, assuming that I'm right, which is not guaranteed, but when this plays out as 1, 2, the second wave should retrace at least to the 38.2 area. So, which means if we were to go, for example, to 28 right now, we would expect then a ABC correction, for example, to 25.64, potentially lower. But yeah, it's also possible that things go a little bit faster. I mean, we've seen it in the past that sometimes movements get extreme. But even then, we wouldn't assume that we will retrace from whatever peak we reach, 38.2% down. And I think with that, we've covered everything for today. I know it's not that much or that exciting because I have most of my funds committed, which means I don't have any wiggle room to jump into new positions. And so yeah, like I don't have the extra funds to put my money where my mouth is, in quotes. So to, for example, jump into gold and jump into, in that case, potentially shorting NVIDIA or buying puts and so on. But you can keep an eye on it. So if one of those instruments we covered today is what you're looking at, then hopefully my short and brief analysis helped you in some way. Don't forget, you can also always ask in the chat if you want me to look at something specific. As long as I have the data feeds for it available, I'll happily look. And if I don't have the data feeds, we can, in not all cases, but in many cases, use TradingView to still do some rough labeling of the chart to get a rough prediction based on Elliott Wave Theory. However, the best thing to do is, as always, do your own research. So again, like maybe follow the link in the description below, read the Elliott Wave principle for free online, or grab yourself a physical copy and just try to apply it to charts yourself. And I promise you, or not I promise you, there are no promises, no guarantees here, but at least for me personally, it feels like, yes, sometimes I get it wrong, but often when I get it wrong, it turns out later that I misidentified the pattern. Yeah, so it's then usually on me. But often enough, the patterns actually turn out quite well. And yeah, I just wish I would have more time, but I also have other things to do in my life. So pretty much most of the time, my trading time is what I do during the stream. And other than that, I might have an alert configured to do a little bit more outside of the stream if certain price levels are hit or so. But the rest of my day, I'm not trading full time, don't want to. And yeah, like have other things to take care of, like my other YouTube channels, our software business, and so on. And yeah, therefore mistakes happen. Yeah, because we don't always have the time to do like super detailed research of everything. Yeah, it's going to be interesting to follow that, and it's going to be interesting to see if I'm right with my call to sell the $35 covered calls in GameStop this week, because if it would play out that we finish above 35, it would mean that with the shares, first of all, I get rid of the shares and I get a bunch of extra money. And second of all, with the shares, I would pocket another $2,500 profit, which would not be bad for a week. Although one has to clarify that obviously is, as always, before taxes. Taxes may vary depending on where you live. You should then look for a professional that can consult you on that. Either way, that's it for today. And with that, I'm going to leave you to it. I wish you a lot of success for this trading week, and likely see you guys tomorrow around market open as usual for another episode of Daily Market Mastery. Till then, bye-bye.